What's going on, everyone? Welcome back to my YouTube channel. I trust we are all enjoying the learning process. Today's topic is breaker block versus order block. So what do you do when you're faced with both? Alright, let's get started. The first thing, guys, the first thing you want to do as a trader is you want to outline your trading range. So where are you trading from? As a trader, you need to guide yourself with a trading range. Already I've done this on my screen. I've outlined my trading range. You can see this point here and this point and this one as well. So we're in a bearish market. We're bearish on this market right here. So that is why I've outlined this market this way. Now the idea here is I would like to see price trading below this structure, below this trading range. All right. However, if price trades above the structure, then there's a high chance I would start looking for some buys. Okay, but if price trades below the structure, then I'll look for some sells to the downside. Okay, so this is the plan. This is why you need to outline your trading range and let it guide you. So right now we're getting close to this trading range of mine, and all I have to do is just wait. Let's play price, and right now, so price is currently at this trading range. We still can't do anything yet. We still need to be sure what's going to happen. And while we wait for price, we then see this good momentum to the downside. We can see a break here, a shift in market structure, and this here is our breaker block. So guys, this is the topic for today. This here, right here, we have our breaker block, and the question is the breaker block. We also have an order block right here. So which are we going to use? Which is going to be the entry, right? Right, guys, so when we zoom out from this, we can now have a look at the market. We can see all of this buy side liquidity has been taken. Okay, all of this buy side liquidity has been taken, and we have a trend line liquidity here. So there's a high chance of markets going to take out all of this sell side liquidity to this point, right? So for the breaker block, so market, first of all, in this breaker block, we have this fair value gap. And for fair value gap traders, the principle for fair value gap is you want to go short. Okay, you want to go short on the fair value gap. If let's check the next candlestick. All right, perfect. So you want to go short somewhere here and SL right there, then target the sell side liquidity because this is the next draw on liquidity we have here. So this is for fair value gap trading schematics. Okay, however, this is not the idea for the trade. Okay, now these things actually works. The fair value gaps, yes, they actually work. Right here you can see the market is using that fair value gap to take out this sell side liquidity. Okay, now the fair value gap worked because it's also in confluence with a breaker block. However, if we are to use a breaker block to actually trade this market, right now we're taking this sell side liquidity here has been taken. So we still need price to get back to this breaker block. Yes, so this becomes, all of this becomes liquidity. All of this becomes liquidity right here. So we need price to get back to the breaker block. And let's see what happens. So we'll wait for price, and price returns to the breaker block. All right, so we're currently in the breaker block. Now guys, sometimes we might be faced, the market is fractal, so you might have a structure like this. We might have a break of structure, right? And you have a supply zone here. You're trying to sell from the supply zone, but price will get close to your supply zone, refuse to trigger you in, stops here and go down. Now when you're faced with something like this, yeah, this is an external liquidity. It doesn't mean your supply zone is wrong. It's just that the market just this just simply means it will take longer time for price to come back to that point to your supply zone. But eventually price is going to come back there, mitigate that last supply. If there's any supply here, mitigate it, then finally drop. Okay, so yes guys, price can do something like this and it's still fine. All right, now right here we are currently on this breakout block. The question here, the stuff here is, are we meant to actually look for sales here, or are we meant to look for sales at this order block? Because we still have this imbalance here, right? So where are we meant to look for sales? Is it at this breaker? Are we to maintain selling from this breaker, or focusing on this order block? Now we have to let the market to guide us, because you and I know that we are not the ones in charge of what controlling this market. We are not the market makers, we are traders. We speculate, we just make this analysis and try to interpret what price action. So whatever price action is being displayed for us, we will try to work with that information, right? So currently we know that we are on a breaker block. Okay, so on this breaker block we want to see price displacement to the downside possibly. And right now we can see here, we can see right here we have this structure. What we have this higher structure here, and we have a shift right here to the downside. So this shift right here to the downside is an indication that yes, we can look for some shorts, right? And this here is our displacement, guys. This is called a shift in price delivery. All right, guys. So this is a shift in price delivery. If you want to go short, this whole shift in price delivery is happening inside our breaker block. You can see we have these lower highs here. So this is happening inside our breaker block. We have a shift in price delivery. So right here we can begin to go short, look for some selling. And when we sell here, the next thing, since we are selling based on this shift in price delivery, we can also target this shift in price delivery that occurred here as well. So you see this right now. So this is going to be where we sell from and target this area right here. Now I like to trade engineering liquidity concepts. I like to be going for the snipers. So instead of taking a sell here, I would like to take my sell at this point. I can see some engineering liquidity here. So this is actually the shift in price delivery. So you can put your sell limit here and that was fine, or you can go for a sniper for the engineering liquidity and put your SL somewhere there. So right here, and we can go for this 7R. Then let's put this on a very safe side. So 6R, this is fine. Okay, so we can do this right here, because this is our, guys, like I said, this is the actual shift in price delivery. So if you put your sell limit here, it is fine. I am just going for this engineering liquidity to get a sniper entry. So you have to make sure you're aware of your broker's spread, because spread is another thing in the forex market. If you go for snipers, if you refine too much, you might miss your entry when spread gets in play. So right here, now we are in on this trade. This is the actual price shift in price delivery. Okay, so we have here we're in on this trade and we wait, because we've taken this trade based on the price delivery. We can target this price delivery as well. And right here we hold this market, and right here we are now here. Now the question here is, am I going to hold this trade? Because sometimes when I trade, I tend to hold my trades. I close some positions and I hold the rest. Now this is my trading range right here, from this price to this point. So since price has given us a shift right here, then there's a high chance that we should actually trade from this point all the way down to this point. This is the point of this whole trading range, right? Good. But then how Should this trade now, am I going to hold this trade to the end, or is there any other thing that needs to be done? Now, what I have to do next is I have to go and look at this market from a different time frame perspective. I need to take a different view entirely. So what do we have going on right here? So on the 4H time frame, I can see clearly that all right, we have a market shift that sells our liquidity. We have a shift right here, and we have the break of structure, break of structure. All of these are the break of structures. It was the last break of structure we have there. Market shift as well. So, and let's check on a different time frame. On the 3 minutes time frame, we can see what we have. We have this unmitigated order block. There's a supply there. This order block is just sitting there right there. Okay. So all of this is going to be what liquidity. This right here is going to be liquidity. Now, when I see something like this, all right, I am going to close all of my positions on this shift in price delivery. The reason why, because the market is fractal. I mean, anything can happen and we can get a pullback to this unmitigated order block. Now, guys, if this order block here was already mitigated, if there was nothing like this here, then I would like to hold this trade down to this point, okay, down to this point as planned. But because we still have an imbalance that needs to be filled, we still have what an unmitigated level here. This is the reason why I would not want to hold these trades all the way down here. So what I'm going to do right now, I'm going to close all of my positions right here and make sure I come out with a full TP here. And right now, I'll wait for price to come to this supply zone. This is where I would like to sell from again. If, that is, if price decides to come here, then I would like to take a sell. Now, because I have outlined my trading range already from the higher time frame, guys, this is a situation where I don't want to wait for a 15 minutes chalk or market shift. So there are conditions when we wait for a market shift, and there are conditions when we don't wait for market shift. All right. So I have already outlined my setups. That's why I'm going to go here now, targeting this. If this is a if price decides to come back, this is where I would like to sell from. Now, if price doesn't come back here, guys, that is fine. Then probably we'll get more break of structures and more liquidation. I need to see something like this happening. Let's say something like this happening. Yes. So the price can come back somewhere to another supply and keep going down. This is the plan. Or if I don't see any of these, then there's a high chance price will come back. But sometimes we might just have a rally to the downside, and the market just rallies and come all the way to this point. It's a possibility, okay? All of these are what possible in the forex market, okay? So right, so let's do this. So now let's check out the market and see what happens. So while we wait, and you can see right here, we get triggered in as well in the market. So price came back for one final mitigation of this supply right here. The final what mitigation of the supply, because we have this imbalance right here, and you have our SL right there to be on the safer side, okay? And since we all of these are there, the next thing we want to do is what target these structures right there. And now we've achieved that target. You see that very easy. So if you are very experienced in trading, you would know that when you are faced with a breaker block and an order block, price mostly visits both of them. First, price will come to the breaker block, work with it. Then after some time, you use that breaker block to accumulate liquidities like this. After a while, come back towards the order block. If you're very experienced in trading, you would understand what I just said here. All right. So right now, guys, this is it. As you can see, price has left this point and come back to my trading range. Now, in this point, what can I do here? Right now, I'm still expecting, with this momentum, I'm expecting price to sell. However, before I can sell this, before I can sell this, I need to see price trading below this range. And if I see price trading below this range, then I'll sell, targeting this range, this next price. Okay, this is how I trade, and let's see Let's see, let me add this to the video. Let's see what we have here. So if we play this, and we can see some accumulation of price, some accumulation, and you can see a massive rally back into the trading range, right? This doesn't mean we are bullish yet on the long run, but it just simply means that there could be some buyers present, right? So if there's some buyers present, let's see if we have a shift, if we can get a shift of this structure, this swing as a swing point there. Okay, so let's see if we have can have a shift there, and we have a shift right there. So let's go on a 30 minutes time frame. So all right, so I would like to be buyers. We have a shift of the swing point. Then I would like to be buyers. I can see this free order block here. This is a free order block. This was a jump, and this price doesn't count. Yeah, price we have to still come back to actually feel this jump here that happened on the, okay, this was a midnight session. Okay, the spread, when the spread is always open, so price will come back to this order block right there. So um I would like to go in somewhere here, can target this liquidity, because the reason why I said this is because before I can look towards buying big time, I need to see price actually trading above this structure. When I see price trading above the structure, then I know we are bullish. Then I'll find the next trading range higher so I can take price without swing. But you see this right here, I am not going to try to buy this market all the way to this point because we are bearish. Until this is taken out, then I can say we're bullish. So what I can do is I can actually take a little buy here and just go for a simple buy side liquidity, as just one, something as simple as this, and go for a 6 hour or 5 hour depending. So I want to make sure my stop loss is well placed. Yes, everything, yeah. Can go for a simple 5 hour. Let's play and see if we can get this correct or not. Let's see what happens. So right here we get triggered on the trade following that this 30-minute structure. So let's go back to the hourly time frame and let's see what happens. So I'll just go for this buy side of liquidity, and now we've gotten that buy side liquidity. So after that, you can see price return back to the same point, and we're now having a bit of ranging movement, right? So this is why I said I would not like to take this price all the way here, because there's a plan here. I'm still looking bearish, okay? I'm still looking at this market in a bearish form. And let's see, it's just market is just doing its thing. And okay, right now we can see the market has come back here into this trading range. So let's see if we can get a pullback. I just want to see market trading below here and give us something nice. So we're still back into this range. Okay, we're back below the range. Let's see if we can get something interesting. Perfect. Yeah. So here I can see we have a market, we have a break of structure here, or we can call this a market shift. We can call this a market shift. If we call this a market shift, then we take this as our liquidity here. Okay. So market took out that liquidity here, gave us a market shift. And right now I can see this is our shift in price delivery. Okay, guys, this is our shift in price delivery. So we can take ourselves from here, or I can just go for my engineer liquidity. I like to go for snipers, so I can just go for this engineer liquidity right there and do this. So my SL should be slightly above this range, just in case price decides to revisit this range one more time. And I can go for a 5 hour, this range 5 hour. Okay, so this I can go for something like this, and let's see how this plays out. And yes, we are not triggered on the trade, and let's see what happens. And that's what I think. Okay, see that. So it seems there was a news on this day because there was a high impact, there's drop, massive drop. However, all of this drop happening here is none of my business. Trust me, guys. I have a plan. These are my trading ranges, and I focus on these points. So if my plan was to sell from here to here, I am going to sell from here to here, or something like this. Okay. So all of this happening here Unless I have made a data, I have made more analysis and I have more structures on the left that will guide me, then I would go lower. However, my analysis stopped here. So this was the last low I figured in the market structure. That's why if I'm to sell from this whole point, I'm going to target the here. And all of this happening is just none of my business. Okay. So guys, you can see how we've been able to trade using this sequence. All right. Now you see what's the most important thing here, guys, is your trading range. Okay. Always make sure you have this guide. And when you're faced with a breaker block and an order block, just know that the price is going to use the breaker block, sell, accumulate liquidity, then later come back to the order block or proper mitigation before that true move. Okay, so we cannot use this breaker block when we know that we have an imbalance here. We cannot use this breaker block trying to take this price all the way down here. It doesn't work that way. You have to be sure that every imbalance, everything on this premium has been mitigated first before we can say, all right, let's go to this swing point. This is swing point trading. You have to be sure that everything here is mitigated. Okay, so I hope this helps, guys. I hope this helped. Stay tuned for our next video. Peace out.